Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Just want to give you some grains commentary for today, Friday, May the 8th. Let's start with corn. Still a lackluster trade, but you notice we went down there right against the 360 area in the July corn, and we didn't do much, but we did bounce a little bit into the close. I think that was actually getting some support from what the wheat market was doing. As far as corn goes, as much as we bounced up to 370, gave it back in the flash of an eye. So unfortunately, until we get a catalyst and some news, corn just doesn't appear to want to do anything much. The ranges are tight, and there's just not much of a trade there. So we're going to look forward to progress on Monday, as well as yet another USDA report coming on Tuesday. Let's move to the wheat market. We had results come out from the Kansas leg of the crop tour yesterday that, at a glance, actually looked a little better than anticipated. No reaction in wheat on the open last night, and interestingly enough, when we reopened this morning at 8:30, you had the standard move away from the highs like we see most mornings, but the market came right back. And it's interesting, as we went into the close, you saw Chicago wheat rally. Obviously, that's where the predominant short is, as well as the Kansas City best close here in a couple of days. So I think personally, two things are going on. First of all, the wheat corn spread has attracted some attention. Let's realize that we were around 101, 105 here a couple of days ago. Now we're up above 115. Looking at the chart, fundamentals, it makes sense. People are going to come after that spread, at least in the short term. The second event is you saw a weather report come out today about the western Dakotas. Now, we don't want to get too excited about it, but they are looking for snow. I think that might have boosted a little bit of that cover into the close. And obviously, anyone who's got a large book and a huge short position on, makes a little sense they're going to take some off in front of the USDA report. So I think that's all it was. We'll see what we get on Tuesday, but definitely, if you can say anything, it's a decent close for wheat, and been a long time since we've said that. Moving on to soybeans, last night's soybean trade was perhaps as tight of a range as I can remember, at least in recent memory. I think it was 4.5 cents. We're able to make new highs on the open, no follow through, sold it straight back down, no follow through, and we sat there and chopped the rest of the day. You'll notice the meal market is just kind of stuck. It was initially today, looked like it was going to test support there around 310 in the July contract. Did nothing, bounced a little bit. I mean, just a very quiet trade. You notice as well, bean oil came back. You saw a 100-tick sale, or excuse me, the market broke 100 ticks off the recent highs. It bounced again today and was flirting with 33. So, when the July bean oil at 33, recent high was 33.48. We'll keep an eye on that, and it just looks like, you come in one day, they're long the meal, short the oil, and then vice versa. So just not a lot of story for the beans. We've got a USDA report coming at us. There's just nothing else there at this time. You had no news on the strikes, and it appears to be a wait-and-see attitude. We're just going to have to look to the report for some guidance moving forward. So that's all we have for today. I'm Kyle Markham with International Futures Group in Chicago, a division of EFG Group. If you've got any questions, don't hesitate to give us a call.